Welcome to this video. I hope you had a great Friday. And today we're going to talk about Beyond Meat. It's crashing again, it's hitting new lows, dilution keeps piling up, and the earnings delay caused a lot of panic. So is this the final stage before bankruptcy? Or can this be a massive buying opportunity? Today I'm breaking down the real numbers, the risk, the hype, and what the future really looks like for Beyond Meat. So buckle up and let's dive right in. We're now looking at the charts on TradingView of Beyond Meat. And we can see here that in the last week, the stock crashed a lot. If we go from previous high to now, it's around 83-84%. The market has collapsed massively. You can see my average cost price is around $1.97. So I'm personally down around 40%. Why did this stock collapse so much in the last few days? So the first reason why Beyond Meat collapsed in the last few days is because of the fear of the diluted shares. In this article, Beyond Meat plummets after debt swap massively dilute shareholders. So dilution is essentially that they were creating more shares to pay off their debt. And once they issue new shares, then each share becomes less valuable, obviously, right? And that's why the stock price collapsed. But you can see that this was a month ago. An article was from October 13th. And it was before the 1000% squeeze. So I think that this issue is already priced in. This issue alone is not going to push this stock price to zero. I think this issue helped the company to survive for at least another year because they got rid of their debt. And that is actually not a bad thing. So this issue alone is not going to bankrupt Beyond Meat, in my opinion. Another reason why the price of Beyond Meat is so low is because it's not a profitable company. They're losing money every year, and the financial strength is also not really good. And here you can also see in their income statement breakdown that this company is not a high margin company, so there's also a lot of room for improvement. But for right now, we can see that out of the revenue, 87% goes to COGS, cost of goods sold, and there's only a very small gross profit margin. So the third reason is that they delayed their earnings report, which is a rare occurrence. And so here you can read Beyond Meat revealed on Monday that it will be delaying its third earnings report on November 11, citing the need to recalculate a non-cash impairment charge. So one of their assets is less valuable than they anticipated before, and they need to recalculate it. And this will affect the balance sheet, and it will affect the net income of the earnings on November 11th. And that's why people are uncertain and worried. So November 11th is going to be an important day for this company because then they will release the earnings and we can see what the results are. So these are the three bearish arguments. They have bad fundamentals, there is dilution, and the earnings were delayed, and that brought a lot of uncertainty. But here are some reasons why this might be a big opportunity for long-term investors. One bullish thesis could be that Beyond Meat is operating in a plant-based meat market. They are one of the only few public companies that are in this niche. They do have a lot of competitors from private companies like Impossible Foods, but they are the only public company. And you can see here that the global plant-based meat market size was valued at 7 billion in 2023 and is projected to reach 24 billion by 2030. Growing at a compounded annual growth rate of 19.4% from 2024 to 2030. So that is a high growth rate. And if they can do the management better, if they can get higher margins, and if they become profitable in the future, so then the stock price could increase a lot from now. So this could also be positive news for Beyond Meat. Beyond Meat teams up with Hard Rock Cafe to bring the latest Beyond Burger to fans nationwide. Starting today, the iconic restaurant will offer the meaty, juicy Beyond Burger as a swap for any beef burger on its menu. So Hard Rock Cafe is a restaurant franchise in the United States. It's very popular, and they're now distributing through Hard Cafe as well. And that's something that Beyond Meat does really well, is they distribute their product. They sell over 80 countries in many places. Recently, they did a Walmart deal. Now they do a Hard Rock deal. So that is great. They are expanding their product and increasing visibility. So this can lead to increase in sales and profits. So one good reason that Beyond Meat could go higher is that we're close to capitulation. It crashed almost over 85% from recent highs, and you can see that's now only $1. And people are now, the sentiment is bearish. When it was like $3 or $7, people were super excited and everyone was bullish, but the company is pretty much the same. The dilution was, everyone knew, people also knew that they were not making any profits. They were losing money every year. This was not a strong fundamental company in the first place, but at that time people were strong because the price is high, and now the price is low, people become negative, and people are starting to lose hope, which is very understandable, but that doesn't mean that the business is over yet. There is still a probability that this whole business could turn around and recover to previous price levels. So what is capitulation? Capitulation means the moment when investors completely give up and sell their stocks out of fear, frustration, usually after a long price drop. It's when almost everyone thinks the stock is doomed, so they panic sell it all at once. And ironically, this is often when the stock hit rock bottom because there's no one left to sell and prices can finally start to recover. I think we're pretty close to capitulation right now. So despite my bullish take on Beyond Meat, I still don't over allocate on this stock because I understand that this is a very volatile stock, and it's not fun to see your portfolio go up and down by 80%. And so that's why I only allocated 2% of my portfolio to Beyond Meat, because this is a very volatile stock. I think there is possibilities that this can go up and then it can increase so much that this can easily become like a full stock position, like 7% or much more than that of the whole portfolio in the future. So I think that even with a small allocation, you can still make a lot of returns if your plan plays out well. And if it doesn't play out well, then it doesn't affect your portfolio too much. So I added more, and I think I'm now a little bit over 2%, like 2-3% at the moment. So year to date in 2025, Beyond Meat is minus 70% year to date. So it's pretty negative. And if we compare it to all the previous years, like 10 years or something, then we can see that it's already somewhere in the bottom. Only 2022 was worse so far. So I think based on the averages, I think at the end of the year, it could end up a little bit higher. So minus 30%, for example. The cash runway calculator calculates how long the cash of a company will last until at the current burn rate, until it goes bust. So how long does Beyond Meat has left until they run out of cash? So the cash runway in months is the cash on hand divided by the monthly net burn. So cash on hand is 105 million. The net burn is 110 million and the period length is 12 months. So then we come out of 11.5 months, which is a moderate cash position, which means that this business isn't going to go bankrupt anytime soon. They have at least 11.5 months to fix everything up before they run out of cash. So they do have time to improve as a company. So we're now back at the charts, and the most important event coming is of course the earnings, and the earnings are on November 11th, and the expected earnings per share is minus 40 cents, which means that for every share they lose 40 cents. And if they report above this, so more positive, so closer to zero, then that will often lead to a gap up. Same with the revenue. It's estimated at 68.98 million. If it's more than that, then there's often a gap up. So let's hope that on November 11th, the earnings are going to be great, and that the impairment, the asset that was not calculated well, that is not going to affect too much. Let's hope that it's just a small part of the company, and that the earnings and revenue are still pretty good because of what their latest strategy of distributing products more through Walmart and through Hard Rock Cafe. In short, I'm still bullish on Beyond Meat. I think it still can give you a good risk reward, but of course the volatility is extreme. That's why I only allocate a certain percentage of my portfolio to this stock. I think this can go really well once the hype gets back in and once the management goes a little bit better, and especially after good results on November 11th. Of course, always do your own due diligence, always do your own research. I hope you learned something. I hope you liked it. Feel free to like and subscribe for more videos like this, and I'll see you in the next one.